Let's talk about how to prevent one of the greatest threats to you, your business, and your business's revenue, and therefore your livelihood. It's the loss of a key employee. Now, we often think of our assets in business as things like the goodwill that we have, or our reputation, our assets, or our equipment and our inventory and our unique systems and processes that make us be able to deliver that unique value. But really, your employees are the greatest assets. What they do is what allows your business to move forward. Think about someone in your business who is really one of those critical components, almost like a pillar in your business. That might be a key salesperson or possibly a key technician, depending on what type of business you have. Often these people have decision-making power. They usually have a high salary, and usually somehow they have this skill and knowledge and expertise that would just be extremely difficult to replace. Now, if you lost that person, not only are you losing that person, but that could have potential impact to your business because they're no longer able to provide that unique experience and skill and ability. You're going to have to go find somebody to replace them, and that costs money. And it costs you time. And in that time frame, you're probably going to have to hire somebody, train and develop them, which also costs money. And then you're going to be in a position where you have to pay for mistakes that they might make along the way as they really get up to speed. So what are a few ways you can think about this cost in advance and really be able to prepare for that so that it doesn't sink your business? Well, one option is something called a sinking fund, and this is where you put money aside on a monthly or annual basis, and it accumulates large enough that you could use that sinking fund to compensate if you did lose that key employee. Now, the challenge is, an event like that is something that is very difficult to plan for. You have no idea when or how or if it might happen, and so a sinking fund may not have the time that you need to build up sufficient funds. Now, you could think also of paying out of cash flow. Maybe your business is thriving right now, but think about the potential loss of cash flow that could occur if you lost that key person. And then would you have enough cash flow to cover, in the meantime, the shortfall that is caused by their absence? You also could think about business reserves, but do you really want to deplete those reserves at a time that you might need them the most? And then sometimes people would look at getting a business loan. But however, the bank may look at your business as more risky now that that person is gone. You may not have the same goodwill and the same revenue stream at that critical moment. So here's why life insurance can really fill the gap in a powerful way. First of all, it's the only self-completing sinking fund that you can have, because as you pay premiums in on a monthly or annual basis, you know that if that person passes away at whatever point that is, you'll have the full death benefit to be able to compensate the business and be able to inject that capital back in so that you can sustain during that critical moment. Now, also it's something that you're paying over time, so you're not having to come up with these funds all at once. Another thing to think about is there's different types of life insurance, and if you use cash value life insurance, specifically an infinite banking policy that's high cash value, dividend paying whole life insurance policy with a mutual company, what you have is you have this cash value that is accessible to the business can use for anything. They can use it for emergencies, for opportunities that might be completely unrelated to that key person. So you're really getting your dollars to do multiple things. So one thing I want to mention about key person life insurance is that the business is paying the premiums. The policy is on the life of the key person. And if that person passes away, then the beneficiary is the business. So the proceeds or the death benefit is being paid to the business. Now, a couple of other things you want to think about with this are that you might want to have that policy be transferable, meaning if that key person, say, moved on from your company and you hired another person to fill their role, you could transfer the policy without having to start a new one. That might be subject to underwriting, but you're going to be able to maintain your cash value. So when you look at the big picture, this is a really powerful way to get your dollars doing more than one thing. Not only can you be building business reserves, but you also can be protecting or mitigating or indemnifying against the loss, the financial hit that might happen if a key person were to pass away. This then solidifies your peace of mind and really is an ultimate protection component. It really comes down to this. It is a protection that allows you to have the peace of mind of knowing that nothing can really take away that wealth that you're building in your business, and that the potential loss of a key person is not going to devastate you financially. That peace of mind then allows you to walk in abundance and really have the greatest creativity and move your business forward and really make the best decisions so that you can innovate and serve people to your greatest capacity. Hey, I hope you liked this video. If you did, click the link in the description box below for more information. And don't forget to like this video. Share your comments, questions, and feedback in the comments section below. And don't forget to hit subscribe to our YouTube channel.